Okay, beautiful people. It's your man to here. Welcome to today's video. Where we're gonna be tackling a trend today. We're gonna be talking more of a trend. But ladies and gentlemen, before we go anywhere further, kindly do this favor for me. Kindly go check out the description side of this video, and then you'll see that okay, there's an Instagram account. Then kindly go check out my Instagram account, and then give your boy some follow. And then the other thing is that okay, kindly join our free Telegram group for quality signals and for quality analysis. And then okay, back to work now. So we're gonna talk about a trend. A trend. You should be asking yourself that okay, as a trader, do you understand the properties and rules and all these pros and cons of a trend? You understand? One of the most underrated chapter when it comes to trading. You understand? So I'm gonna be just showing you guys how to go about understanding the market trend. You understand? So now, what I normally refer to as a trend is that okay, is the movement of the market. It's the movement of the market without direction. You understand? So that's what we call what the movement of the market without a direction. You understand? Which means the market is moving, but then we do not have a direction. Okay, so we have different types of trends. You understand? We have two different types of trends that I normally love to talk about, which is an uptrend and a downtrend. You understand? So how these trends are compiled, they are compiled by what? A direction and a movement. You understand? Which means for you to have an uptrend, an up meaning that it's a direction to where? To the upside. You understand? And then the movement is what? It's the trend. You understand? We have a downtrend, which simply means that okay, we have what? We have the direction, which is way facing to the downside, and then the movement also. So it's a bearish movement, it's a bullish movement, which is a direction plus a movement. Okay, so now these trends here, they are they are very, very important, ladies and gentlemen. These trends here, they are very, very important. So we're gonna be going through all these two trends here that we have. So now we're gonna also be talking about the correctional and impulsive wave. You understand? The correctional and impulsive wave of the move of the market, a trend creating a trend. You understand? And then we're gonna also be tackling the most important thing, the build-up of a trend. You understand, guys? If you do not know the basic, which is the trend property and the trend rules, I don't know why you are trading a trend if you do not know the basic information about this, guys. You understand? So without wasting any time, let's just go straight to the information and start with it. So here we're gonna be dealing with what you call an uptrend. You understand? So that's what we're gonna be doing. We're gonna be dealing with an uptrend. You understand? So an uptrend occurs when the market is doing what? When the market is pushing to the upside. You understand? So an uptrend occurs when the market is pushing to the upside. So within this bullish movement here that we're currently having, so within this bullish movement here, meaning that okay, within this buying movement that we're having within the market, we need to be able to identify the properties and the rules of that trend. So the properties meaning that okay, those are the components that forms a trend. You understand? And then the rules, those are the instructions that the trends need to follow. You understand? So now, as you can see here, that okay, I made two examples, meaning reason being, this is the unrealistic example of an uptrend, and then this is, I would say, the realistic side of the market. Why? Because if you can see, I tried to make sure that okay, I show you guys how the market be moving. You understand? On daily basis. Because the top one, it shows that okay, no, we are only moving forward, up, down, and up and down. But here you can see that okay, oh, there's some things that are happening within this guy here. Okay, so an uptrend has what you call higher highs. So higher highs, those are the top phases of the markets. So we have our higher highs here at the top. We have our higher highs here, and then we have our higher highs here. And then now we have our high lows at the bottom. Yes, then we have what? We have our high lows here at the bottom. You understand? So those are the properties of an uptrend, meaning that okay, for you to be able to tell us that okay, oh, to manage JPY, I'm on a bullish trend. I should be able to do it. I should be able to see on your chart that okay, we have a series of what? High highs and then high lows. You understand? So now we're gonna go to the rules. So the rules of this uptrend here, they state that okay, the market, for you to be on a bullish trend, ladies and gentlemen, for you to be on a strong bullish trend, the market needs to do what? It states that, okay, the market needs to break higher highs. As you can see that, okay, at this level here, we're expecting the market to do what? To break higher highs. You understand? The market do what? Will forever break higher highs. And then the market will go down to do what? To respect your higher lows. You understand? So the market will come and respect your high lows. After respecting your high low, it will go up and do what? Break a higher high. After breaking a higher high, it will come back and respect a high low. You understand? It will come back and do it and respect a high low. So the market will go on again and do what? Break a higher high. So this is the market doing what? This is the market breaking this high high. Then, which means that, okay, we are looking forward to seeing the market doing what? Respecting a high low. You understand? So, and it says that, okay, now what happens is that, okay, on your uptrend, you should always look for buying opportunities, ladies and gentlemen. You should always look for buying opportunities. So basically, this is where you're gonna be taking your buying opportunities at your high lows. So a high low is a level where you're gonna be taking your buying opportunities, meaning that, okay, after the market breaks this high, you're gonna start looking forward to doing what? To taking your buying opportunities when the market retraces back to your when the market retraces back to your high low, your previous high low. You understand? So now, for you as an individual to tell us that, okay, Tumelo, I'm on a bullish trend, meaning that, okay, you are on a confirmed bullish trend. What needs to happen is that, okay, the market needs to at least give you the following things. You understand? So the market needs to at least give you the following things. So let me just do something like this. Okay. So the market needs to at least give you the following things. It needs to give you first low, first high, second low, and then second high. So this is what you call a confirmed trend, where the market gives you two highs and two lows. You understand? So mostly, I always advise everyone to take their trades at the third point. You understand? At the third low, and then going up, which means the third low, third high, fourth high, sixth high, till the market does something. You understand? Meaning that, okay, you cannot take a trade if the market has not yet formulated two highs and two lows. So now the question is that, okay, like I said, the market will do what? The market will create a series of high highs and high lows, right? And then it will break highs and respect lows. But then let's say that, okay, the market breaks a low. You understand? Let's say that, okay, the market does what? The market pushes to the downside. And then instead of respecting this low, it breaks it. You understand? So what will happen? So ladies and gentlemen, this phase here, it's called what you call an unconfirmed trend. You understand? Why am I saying that it's unconfirmed trend? It is because of we do not know where the market might go. The market might continue pushing on a bullish trend, or the market might start pushing in a bearish trend. So normally on the smart money concept, traders, they call this thing a change of character, a possible change of character. So it can only be called a change of character when the market has also confirmed the change of character rules. You understand? But then if it has not yet corrected, I mean, it has not yet formed and respected the rules of a change of character, it cannot yet be called a change of character. So always be aware of this thing. Once you see yourself on a strong bullish trend, but then the market ends up breaking the rule of that trend, note that, okay, something might happen. It's either the market might change its character from being bullish to being bearish, or the market might continue pushing to the upside. But normally people call it a false breakout, but sometimes it's not a false breakout. It happens that, okay, the market might switch from that false breakout to pushing bearishly now. Because a false breakout on this state here, it will simply mean that, okay, the market did what? It broke this level, and then it will continue pushing to the upside. You understand? But then sometimes the market will just come, respect this level, and then continue pushing to the downside now, which means that's where we see the market switching from its bullish trend to a bearish trend. Okay, I hope I'm making sense, beautiful people. I hope I am making sense to you guys. So let's continue now. Another thing that is very important. So now we're going to talk about what? The impulsiveness and the correctional movement of the market. You understand? So Nasdaq Ninja used to say that, okay, a trend creates a trend. You understand? He said what? A trend creates a trend, meaning that, okay, a bullish trend creates a bearish trend. You understand? So as you can see that, okay, so let me just highlight Let me not highlight actually. Let me just remove all these guys here. So let me just remove all these guys that are here. Okay. So this is what we currently have in now. Let me also remove these guys here. So now what we need to focus on is that the impulsive and correctional movement of the market. So when we say the correctional and impulsive movement of the market, we are simply trying to say that a trend creates a trend. So now we are on a bullish trend, right? As you can see that the market is on a bullish trend at this level here. Instead, the market is on a bullish trend. It's on a buying trend. But then the market tends to do what? The market tends to, sorry about that. The market tends to push on a bearish trend afterwards. So let me just click on this guy twice and then change his color now. Okay, unfortunately I can't. I don't know why. Let me just fix it. And everything. Okay, it's here. So as you can see that we're on a bullish trend, the market is on a buying trend. And then the market does what? The market pushes down. You understand? The market ends up doing what? The market ends up pushing down. Meaning that we are on what you call a correctional phase of the market. The market is currently correcting. You understand? After the correctional phase, we're gonna continue pushing impulsively so. You understand? We're gonna continue doing what? Pushing impulsively so. After pushing impulsively, the market will come to the downside to do what? To correct. You understand? And then the market will push to the upside to do what? To be impulsive afterwards. So which means that after every correctional movement, we're expecting an impulsive movement. And then after every impulsive movement, we're expecting the market to do what? To correct. As you can see that the market corrects. After correcting, what are we looking for? We're looking for an impulsive movement. You understand? We're looking for an impulsive movement. So why am I teaching you this thing? The reason why I'm teaching you this thing is to understand what builds and creates a high low. So for you to have a high low, you understand? So the market needs to simply do what? The market needs to correct. So after the correctional movement has been done, this means that the market will do what? The market will start to push bullishly so, which means that now we are able to say that oh, the market came down to do what? To create a high low. So now the market will be on a bullish trend. So since all the market is on a bullish trend, it needs to do what? Go and create a higher high. So once the market breaks this higher high, this means that the market will be in a process of creating a new higher high. So a new higher high will only be formed when the market disrespects the rules of this uptrend here. As you can see that we have an uptrend, a downtrend, an uptrend, a downtrend, an uptrend, a downtrend, and then an uptrend. Instead, which means that you need to be able to see that technically what are we doing? We are on a bullish trend, right? At this level here, we create a high, a low, a high, a low, and then a high till the market takes out this low. As the market takes out this low, this means that we have high chances of ourselves to push bearishly so. You understand? Which means that guys, if the market breaks the rules of a trend, there are high chances of the market to switch from being buying a trend to a selling trend. That's what I'm trying to say. Which means that once the market breaks that rule again of that trend, note that sometimes on this example that I'm showing you, it is at the phase of doing what? Creating a high low or a high high, which means it's done doing that. Why am I saying this thing? It is because of, we can see that, this was the current high high here. But then once the market broke this low here, it shows that, oh, this guy is valid. So now it continued to push to the downside. Once it pushed to the downside, he created a high low. A high low till the market did what? Took this high out. Once the market took that high out, this means that, this high low is valid. We are on a bullish trend. That's how the market moves, ladies and gentlemen. You understand? And then, yeah, so we're going to talk also about a bullish order flow. So a bullish order flow occurs when the market does what? When the market continues to respect the rules and properties of a trend. As you can see here, that we kept on breaking highs and then respecting our lows, breaking our highs, respecting our lows, breaking our highs, and then you're looking forward to seeing the market coming down to respect our low and then pushing to the upside. Okay, hope it's making sense, beautiful people, because it's not, they're in deep problems. So the same thing that I did with this guys here, same thing I have implemented with this guys here. So this is the unrealistic example, and then this is the realistic example here. So here we are on a bearish trend. You understand? So every time you want to identify a trend, always start with the properties. So what are the properties of this guy? They state that okay, we have a lower high, we have a lower high, we have a lower high at this level, and then we have a lower high again, and then we have a lower high. And then here we have what we call a lower low. We have a lower low, and then we have a lower low, and then we have another lower low. You understand? So you go to the rules now. So for you to see that you're on a bullish trend. So guys, I don't expect everyone to trade breakouts personally, because it's quite upset for someone to trade a breakout, but it's fine. It's fine. Just personal preferences. Because if you explain this thing in this way, you'll see that okay, when the market breaks this low, there are high chances of the market retracing back to the upside. But most people, they're looking forward to taking sales here because of a retest. But it's fine. So we break lows. You understand? As you can see that okay, we break our low and then we come back and respect our high. As you can see that okay, the market comes back to do what? To respect this high here. So instead of you taking this breakout, how about you take a trade on our lower high? You understand? Then we go again to do what? To break this low here. We come back again and do what? We break this low. After breaking this low, we come to the upside to do what? To come and respect this lower high within that level there. You understand? So this is what we're currently having. So which means we are looking forward to seeing the market doing what? Coming to this low and taking out this low. Guys, if the market fails to take out this low here, if the market fails to take out this low here, we are not on a bearish trend. We are not on a selling trend. So the rules and properties are critical, which means that, okay, if the market fails to take out this low, we are not on a bearish trend. You understand? So which means if it does not do that, there are high chances of us seeing the market doing what? Let me just remove this. There are high chances of seeing the market doing what? Just simply pushing to the upside to take out and break all these highs that are here, taking out all these lower highs that are there. You understand? So it's always critical for the market to do what? To break and close below this level here. Then that's when you can expect the market to come back and respect this lower high and then push to the downside afterwards. You understand? We break lows and respect highs. Those are the basic instructions that you guys need to be able to hear. So let me just do something like this. Just wanna also insert another example here. Okay, it's fine. It doesn't have to be perfect. So this is what we're currently having within the markets now. So we go on again and talk about what the impulsiveness and the correctional movement. So as you can see that okay, every time the market impulses, so we have this impulsive movement, the market will also have to do what? Will also have to correct. Yes, then the market will also have to correct. Then after correcting, we are on what? We are on what you call an impulsive movement, where the market impulses. After impulsing, we are on a correctional phase of the market. After a correctional phase, we are on a impulsive movement of the market. After impulsive movement, we go for what? We go for correctional movement of the market. You understand? So basically, you can see that okay, oh, Dumelo is saying that okay, this is a downtrend that is gonna formulate an uptrend. This uptrend is gonna formulate a downtrend. This downtrend is gonna formulate an uptrend. And then this uptrend is gonna formulate a downtrend. And then this downtrend is gonna formulate an uptrend. And then we are looking for a break at this guy here. So now we're always gonna look for ourselves on our lower highs, which means our lower highs, those are the zones where we're gonna look for our selling opportunities at. You understand? So those are the levels that we're gonna look for our selling opportunities at. And then also, a very important thing for you to be able to recognize that okay, oh, I'm on a bearish trend. You need to at least do what? Also see the properties also. I mean, see the confirmed trend. Why? Because of you need to have a one lower low, one lower high, one lower low, and then one lower high. This means that okay, now we are on a confirmed trend. So this thing can be called a downtrend. So these levels here, they need to be in a zone where they not even break the properties of that trend. Understand? Which means you're advised to take your sales here and here. And then this will be your loss also. Understand? So this is one of the most important and critical information You understand? It's one of the most important and critical information. And then the bearish order flow. And a bearish order flow occurs when the market is on a selling movement, respecting your properties and also respecting your rules. So now let's say that okay, it happens that okay, the market does what? The market tends to do what? To take out this high here. So once the market takes out this high here, this basically means that okay, the rules of an uptrend has been broken. Simple. The rules of an uptrend has been broken, which means that okay, there are high chances of the market to switch from this bearish movement to a bullish movement afterwards. You understand? The high chance of the market switching from a bearish movement to a bullish movement. You understand? So, ladies and gentlemen, I didn't want to go through the practical side of the market. I just wanted you guys to be able to think about all this information that I've rewarded you guys with today. So make sure that okay, I hope you guys have learned a lot about a trend. I hope you guys have learned a lot about what formulates an uptrend, what formulates a downtrend. So, but before we end this session here, so look, one thing that is very important that I nearly forgot. So look, like I said, we have a downtrend, uptrend, downtrend, blah, 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 and everything. So look, once the market creates this impulsive movement here, it's basically going down to do what? To create a high low. So as the market formulates this high low, this means that, okay, the rules of this downtrend here needs to be broken. Why? Because of the market needs to push on a bullish trend to go and create a lower high and respect the previous lower high. Once the market respect that previous lower high, this means that, okay, it needs to break the rules of this bullish trend here. Why? Because of it needs to go down and break this lower low and continue with, like, it's quite confusing, but quite interesting at the same time. Just try to make sense of what I'm saying. Then you'll see that, okay, oh, Dumelo is basically trying to say this and this and that. You understand? But then I hope you guys enjoyed this video. It's your boy Dumelo J, who are here signing out.